Generally speaking, if you want to purchase a home, you will also be applying for a home loan, otherwise known as a mortgage. But what is a mortgage exactly? Our goal as a company is to ensure that our clients are as informed as possible so that they can feel confident in their decisions regarding the purchase and financing of their new home, because the more you know, the better you do. Buying a home is the embodiment of the American dream. However, this wasn't always the case. In fact, before the 1930s, only 4 in 10 American families owned their own home. That was in part because very few people had enough cash to buy a house. Imagine how long it would take you to save up enough to buy your home all cash. Until the 1930s, there was no such thing as a bank loan specifically designed to purchase a home, something we now know as a mortgage. In simple terms, a mortgage is a loan in which your house functions as the collateral. The bank or mortgage lender loans you a large sum of money, which must be paid back over a set period of time subject to the terms and interest rate designated in your loan documents. When you receive financing for the purchase of a home, you will sign a promissory note, which is a promise to pay and effectively acts as the evidence of your debt or the money lent to you. You will also sign what is called a deed of trust, also sometimes referred to as a first deed of trust. This is the legal instrument that ties your promissory note to the property you are purchasing, effectively making it collateral for the loan. Your ownership in the property for which you're receiving financing is evidenced by the grant deed you receive from the seller, which effectively transfers title to the property to you. If you fail to pay back the loan granted to you, the lender can take your home to satisfy the debt owed in a process known as foreclosure. Now that you have some general knowledge of what a mortgage is, let's talk about where you can obtain one. In seeking a mortgage, an individual needs to decide whether to apply to a bank or to a mortgage broker. In order to make an informed decision, it is important to understand the difference between big banks and mortgage brokers. First, it is important to note that all loan originators, often referred to as loan officers, are regulated by the National Mortgage Licensing System, otherwise known as the NMLS. The loan officers at a bank, credit union, or other depository institution are employees who work to sell and process mortgages and other loans originated solely by their employer. While each depository institution, sometimes referred to as direct lenders, may have various loan products to choose from, the loan officer is restricted to originating loans only from the bank that they work for. They receive their NMLS ID number through an endorsement by their employer through the Department of Corporations, and their training is handled internally through their employer. On the other hand, mortgage brokers are professionals who are paid a fee to bring lenders and borrowers together. They usually work with dozens or even hundreds of lenders, not as employees, but as freelance agents, most commonly receiving their compensation from the lender, not the borrower. These banks are commonly referred to as wholesale lenders. Mortgage brokers are like scouts, evaluating buyers by analyzing each person's credit situation, income, and other factors to determine which lender is the best fit for that person's needs. The broker submits the buyer's application to one or more lenders in order to ensure the buyer is receiving the best deal given their desired terms, and then works with the lender until the loan closes. There is no limit to the number of wholesale lenders a mortgage broker can work with. In addition to being able to shop out your loan to various wholesale lenders, there is also the opportunity to take advantage of niche products offered by these lenders that are not traditionally offered by direct or retail banks. Mortgage brokers receive their NMLS license through an endorsement from the Bureau of Real Estate. This requires them to first obtain a real estate license. Their training is provided by third-party educational institutions, which are required to be approved by the NMLS to provide such coursework, and requires each licensee to apply for and pass the state exam for an NMLS license, as well as complying with yearly continuing education requirements. Now that you have a little more information on what a mortgage is and different ways to obtain one, you can begin preparing yourself to decide on which loan product is right for you.